All right, welcome back. We've got the management of Granules with us as well this morning to talk us through the earnings this time around. Let me welcome him in as well and discuss the numbers this quarter as well as the factors at play this time. We've got Mr. Krishna Prasad with us. Mr. Prasad, good morning. Quite a few things to talk about this time. Let's talk about margin expansion as well. Was there any follow-up? Was there any follow-up this time around as well going forward from the last quarter? How did you see things pan out? Did you see substantial improvement, and do you think it's sustainable?
The commodities that we use for our products,
All right. We'll just go back across to Mr. Prasad in a moment. Strong Q1 margins coming in for Granules. I want to talk to him about whether that's sustainable. The stock continues to trade at a 52-week high and has been up about 180% in the past year. So are high value approvals expected as well? What's in store going forward? That's also what we'll talk to him about, in terms of the outlook from here on. Let's talk you through the numbers. Sales came in at 735 crores versus 595. That's a 23.6% increase year on year. PAT also came in almost double, in fact, 111 versus 57 crores. And EBITDA margins at 25% versus 19.9%. So, Mr. Prasad, good morning. I was asking you about the margin expansion you've seen this time and whether or not it's sustainable. Any follow-up on the Q4 sales which were deferred and can also be a one-off in Q1?
Not really. First of all, let me address the carry forward from Q4. There was a carry forward, but overall, we did sell the material in Q1. However, the inventories, we had a lot of constraints with logistics this quarter. So we had a lot of material which we could not sell. In fact, the inventory we are carrying at the end of the month was much higher than the inventory we carried at the end of Q4. So in effect, I would say there's absolutely no impact of the follow-up, the carry forward. Now, coming back to margins, this year, of course, the gross margin, there was a tremendous improvement, and EBITDA, there's a decent improvement too. However, margins are a factor of product mix and also the inventories that are left behind, unsold inventories. Having said that, we are pretty sure that the bottom line growth will be similar to what we had, and as an absolute number, will be similar like what we have had. And also, we expect that we will be crossing 30% growth this year on the bottom line compared to last year.
Okay, great. So that's on the margins then. Do you think in terms of market share as well, that the stronger share you're currently seeing, again, what's the outlook on that gross margins above 55%? Do you see that sustainable?
Yeah, anywhere up to 55, yes, they are sustainable, definitely. And also market shares, we tend to protect our market share. And the fact that our customers keep coming back and awarding us more business show that we have some value to add from the company. So we are very confident of retaining our market share and also gross margins of around 55%.
Right. Mr. Prasad, do you expect high-value approvals in the coming year or not? Because I think that is what the market really wants to know at this juncture. And what's the guidance that you're going to set out for the financial year ahead?
Yeah, definitely there are some high-value, high-margin approvals expected. And in fact, this year itself, one or two, and next year we are expecting some more. And to enable us to meet these requirements, we are putting up a new block. And that should be ready by middle of next year. And that will be one of the largest MUPS blocks in the world. And with that sort of capacity, I think we could aim for a decent market share in the MUPS market, which is definitely high value.
Would you have any projections in terms of market share or your growth numbers as well for the year ahead?
Whatever big products we have taken, we always get somewhere between 40 to 50% of the US market. And now we are expanding into other geographies, especially Europe. And we expect to get some decent market share there too. And regarding the growth, we do expect that now we stop talking about top line. Bottom line, we think that we are confident we'll be able to cross 30% growth on the bottom line this year.
In the short term and in the medium term, how will the API sourcing, which could change from potentially China, help you or boost your business? Do you think that is something which is a medium term trend, or in the short term also things could change?
I think we have been pretty stable. There's not been any impact of sourcing or concerns on sourcing of our raw materials or APIs. We have multiple sources validated for all our APIs, including China. However, one product, paracetamol, we are dependent on China for PAP, the key starting material. And the problem is the whole world. I mean, especially it's only India that makes paracetamol other than China. US has a little manufacturing. And other manufacturers in India too, even they make their own PAP. They're all dependent on the raw material for PAP from China. So actually, if something really drastically goes wrong, there will be an impact on paracetamol. However, I don't anticipate anything really going wrong with relations and the supply chain. And we are also working on integrating backwards into PAP. We are planning to set up a 30,000 ton plant, which again will be, I would say, the largest in the world with the new technology, which is green technology, non-polluting, much far ahead of the Chinese technology today.
When you say that you expect a substantial improvement in margins, it is essentially a forward guidance where you think that FY21 will be better than FY20. So where is the bullishness coming from? Is it largely because you expect more molecules to come in, or you expect the pricing power to improve and the currency will also be a tailwind for you?
We have, it is product mix ultimately and new approvals that are expected. Some of the high volume products that are expected in the next quarter and the year after that definitely are going to add up to this. And it's basically, I would say, product mix that's going to change the game. Also capacity utilizations. Initially, we were not utilizing our full capacity. Today, we are already running at more than 100% capacity. And we are also expanding. So when we run at higher capacity utilizations, obviously the EBITDA margins improve. So it's product mix and capacity utilization that are contributing to growth.
How much of a business you would say simple cost plus business, where the more you add in terms of capacity, the more money you will make? And how much of your business is specialty stroke business where pricing is an advantage?
Our past and basic business model was efficient manufacturing. So we were manufacturing simple products like metformin, ibuprofen, paracetamol, and a few other products. And by sheer differentiation in manufacturing capability and bringing in efficiencies into manufacturing, we were able to have a cost leadership and get market share. Also, one of the other things that really led us to the market to come to us was our regulatory compliance. We are one of the few companies that never had a regulatory issue, and that also helps us. And these type of products, definitely it's a question of capacity. Now that we have touched decent market share in the US, we don't want to really add more market share at the cost of pricing. So we're moving into other geographies like Europe, Australia, Canada, and South Africa. So it's, I would say, partly capacity, but the margins keep growing as we add more capacity, and also we have pricing power on some of the raw materials.
A lot of countries are now have introduced a concept called crawlback tax. If you don't have a local manufacturing facility, you cannot participate in the government tenders. If you don't have a local manufacturing setup, you don't enjoy a discount which a local manufacturing setup-based company will enjoy. Is that a deterrent for Granules going forward?
In the US, we have partly overcome that because we have our own manufacturing facility in the US, and some of our products, high volume products here, we are transferring into that facility just to be able to supply to the government. And we are partly addressing it, but then definitely the capacities there will not be like what we have here. But going forward, we could definitely look at increasing capacities in the US too.
All right. You've also said that you're pursuing only select ANDA filings as well, only to file only medium to large size, high value, high volume products as well. Talk to us about the rationale behind that, and also your outlook post-COVID going forward, if there is something you can share with us in terms of what it looks like from your business company point of view.
Okay, large volume, and we used to do large volume and low price products in the past, and now we are moving on into large volume and medium price or maybe a little higher price products. And our specialty is high volume manufacturing. That's what we have mastered, and we brought in a lot of efficiencies and also reduced cost. So the same capability, we are going on into complex molecules which are high volume. From normal IR products, we have moved into ER products in the past, simple ER products, but now we are going into MUPS technology, and we have chosen products which are high volume, and definitely with our differentiated manufacturing capability, we should be able to get cost leadership and also a decent market share.
Okay, just, a final question, Mr. Prasad. I mean, of course, you've seen in the last few years a strong operating performance, leaner balance sheet. So as you also just described, sets the tone for growth in the next few years. The top 5 molecules currently contribute around 85% of revenue. Do you expect this to come down at all in the coming years?
It will come down as we add other molecules of similar nature. Definitely it will come down maybe to 60% or 65%. But however, these molecules, we are expanding into other geographies too. Still, it will come down a bit, and other high margin molecules will be taking over slowly.
All right, Mr. Prasad, we'll leave it there. Thank you so much for answering all our questions and sharing with us the outlook going forward after a substantial set of numbers, and also, of course, a great move in terms of stock price. Thanks for joining us. We'll take a very quick break. When we come back, we'll focus on the FMCG sector.